trade them in a diversified index that you can now trade with the S420 futures. Here's where you can find them. More information, you go to go.smallexchange.com/S420. Small cannabis futures, first of their kind, Michael. A lot of equity index futures out there. A few of them have small in front of them from the small exchange. This is the first one that you're going to see out there that is cannabis-based companies. And maybe you can do a little spitballing about the product here because you've been integral in creating it. How many stocks? What's the size? And what the hell am I supposed to do with it?
Yeah, absolutely. Great vehicle for speculation, investment, hedging, day trading. A lot of really cool opportunities here with the S420 futures, and all like all the equity index futures at small exchange. Rigorous process to decide the constituents comprising the index. Here we have 21 stocks ranging from what I would call are like some of the favorite pot stocks we've seen. I've traded a few of them in the past. You got ACB, Cron, Tilray. Bunch of those names. We pick only NASDAQ and NYSE listed stocks to make up this index. So you know you're getting, I wouldn't say like reputable, but at least established companies. And they all have to meet a daily notional volume traded tier and actually a market capitalization tier as well. So you're not getting penny stocks that are going to go bust in the next few weeks. These are pretty well established cannabis names, and true to its name, this is a small future in size, about $1,200 in notional, on the smaller end of our whole product suite. Now 9 products with a margin of only $204. So pretty cheap if you're a new trader. If you're used to trading marijuana ETFs, something like MJ, this is actually going to be very comparable to that. I think it's got somewhere in the 90s correlation. And you can hedge directly S420 to MJ. I think it's like 50 to 1 is the common convention, maybe 60 to 1. Frank, probably better idea there, but a whole world of opportunity opening up now with this new equity index future.
Yeah, we're almost taking for granted how small we're getting with the size of our products, but it is really nice to see something that is just over $1,000 in size, where I think a lot of us have been just like, when you have a suite of products like traditional futures, Mikey, you tend to think like, oh, all this stuff from the CME is like the only stuff that exists. So that's where I have to deal with futures, and futures have to be, tens of thousands or hundreds of thousands of dollars in size. No, futures can be $1,000. Margins don't have to be 1,000 or 12,000 for some of those E-minis and everything else. $200 margin. Our fees extremely low, about 15 cents in fees to trade that. Well below $1, and I think most of those other products are well above $1, multiple dollars in fees. And so really nice size product, but let's talk about its exposure and how it moves, because pot stocks, like you talked about, pot stocks can move a lot. You can see here, if you bought S420 on the first of the year, you'd be up almost 40%. And that's not even half as high as it's been this year. Big moves. And of course, there's a move to the upside, but we have seen in, I believe, 2018 and most of 2019, a lot of downside in pot stocks. Whether you're buying or selling, the opportunity is on both sides. But also, I just want to lay that out there, because this isn't a product that only goes up. It's definitely got two sides to it. And with that being said, the topic of conversation here being why you shouldn't pick pot stocks specifically, and why you're maybe better off in a volatile market to go to something that's diversified. And that's because when you go to pick a pot stock here individually, you're getting wide variance. Like 2021, I just laid it out, a positive year when you're looking at an index that has a whole basket of stocks and kind of lets you know in a succinct manner how cannabis is doing. But you have some of these stocks, like you talked about earlier, you said you've traded ACB down on the year. You have some of these stocks that have moved up and down hundreds of percentage points. When you pick an individual name, you're taken for more of a volatile ride, right, Mikey?
Yeah, absolutely. And this is one of the simple beauties of mathematical finance, which is you can add multiple constituents to a portfolio and kind of dampen the volatility of all of them, kind of get an average performance of the names you have listed here. And no amount of fundamental or technical analysis is going to reveal to you which stock to buy. the nice thing about indexing, especially with a futures contract that's so darn efficient, is you get a little bit of exposure here, a little bit of exposure here, and they all kind of net out. And you can see the S420 line in this graphic sitting right in the middle there. I mean, granted, you're not up 100% as you would have been with Tilray, but also more importantly, you're not down on the year. And I would much rather be somewhere in between there than having to pick between the extreme with no edge and deciding which to choose.
That's exactly right. And the way that you laid it out just made me think of it in this manner. Like, you're not missing out on the upside of your Tilrays and your OGIs. And you're also not liable to the single name risk of an ACB. You're getting the exposure of both. And thus, if next year Tilray is the new ACB and Cron is the new Tilray, well, good, I got both. And so hopefully the cannabis industry does on average better than, its worst performers. You're just hoping that most cannabis stocks are up at the end of the year and you don't have to bet on one of them, because as I widen out the lens here a little bit, you can see that this can be a rough trade. Of course, in this last graphic and in this graphic, it's like, oh, well, I should have just bought Tilray. And it's like, yeah, sure. You can play that game with the NASDAQ and the S&P and everything. And it's like, oh, I should have just bought the best performing single name stock. And it's like, okay, great. But what about on a down year for Tilray? I mean, look at that. ACB is down almost 80-90% in this time frame. What if you had chosen that one over Tilray? What if in the next couple of years, these lines reverse and instead of being up a couple hundred percentage points, you pick the one that is down, like you said so eloquently, dampening the effect there? Because trying to pick one always is like, the newbie trader always loves this idea, because it's like, and not to say that anybody is stupid per se, but I'm really smart. And so I can go into pot, the asset class here, and pick the best one. I can do, like you said, the fundamental research, and I'll look at all this stuff and I'll figure it out. And it's we've seen so many different papers written in the last decade or so that's the average person is just not going to be smarter than an index. Get exposure to pot stocks. Don't get too cute and try to pick one, because that can go really poorly at the end of the day.
Yeah, you're basically just throwing darts if you're trying to pick. And trust me, I've tried to pick. I thought I was like, all right, I know this is the one that's going to go. And of course it wasn't. And I lost some money and I missed out, most importantly, on the other opportunities. And a benefit that we haven't even touched upon, Frank, that I think is worth at least mentioning in passing here, is you could allocate funds to each of these independently. Sure. You could buy 50 shares Tilray, 50 shares Cron, 50 shares OGE, etc., OGI. However, you would be putting out a significant amount of capital to do so. I mean, the whole benefit of the futures contract construct is that you're only putting up anywhere between 5 and 20%. I think here we're being margined at $204. That's just 16%. Sure. Of the notional size of this contract. So rather than put a few over here, a few over there, we've tried to aggregate kind of the most likely names to benefit from improvements in the cannabis sector. There's even Philip Morris and Altria in here as well, big old school tobacco names trying to transition. You're going to have a much more efficient experience using the future as opposed to the individual names or the ETF competitor.
Great points there. And this is where I'll leave it, because this is something that I've learned, and I think a lot of people learn over trading experiences, which is it doesn't pay to get cute. Unless you are devoting your whole life to trying to be the next Warren Buffett, and even then it's very rare that you can do something like that. It doesn't pay to get cute, and you're much better off saving yourself time and effort and using an index. Because even if you are oh, well, Frank and Mikey, they raised some good points today. Instead of just buying Tilray, I'll buy Cron and I'll buy OGI and I'll buy all these things. Like you say, if you're investing $1,000 in pot stocks across these different companies and you diversified against this picking pot stocks, you're paying more than twice as much as you would for the futures. I know it feels good to get on your trading application and pick those names and put in an order for 10 shares here and 15 shares there and so on down the line. But going to the index futures is the best diversification and the cheapest way for you to invest 10 times out of 10. So like this idea of being there's so many other ways to be creative in trading, like don't
Yeah.
waste your time picking these pot stocks. And like, I know they look pretty in your portfolio when you've got a bunch of different names, but like you're trying to make money. So like do the thing that everybody has proven is less volatile, more diversified, and more cost effective. Don't get cute with it.
Yeah, and fractional shares won't save you either. So like
Yeah.
you maybe think, oh, but I can buy a fractional share of it. You're still being margined at the same rate. You might as well allocate some funds to the future and then deploy some strategy on top of that. You want
Yeah.
to add a short option or a long option trade in there using some of the ETFs. We hope to have options on the small exchange futures here shortly. But now you've freed up the rest of your portfolio. Maybe you throw a little extra in Tilray if that's what you want to do. But at least you can rely on this core position in the S420 futures, which are broadly indexed.
Awesome, man. Thanks so much for jumping on here, Mikey, as you do every Friday. It's always a blast to hang out with you, talk about pot stocks this week. Again, this is the first week of trading in the S420 futures. If you haven't checked them out, you got a couple more hours to take part in this first week of trading in such a new and fun product. And it only costs about $200 to trade. So go check it out. The markets are mostly inside here on Friday afternoon. So maybe put it in order to buy and then sell it, see how it feels, or add some pot stock to your portfolio, everybody. There's plenty of time to get some stuff done here. And if not, at least you learned a couple things about indexing versus picking stocks and reducing volatility and increasing diversification and everything else. Mikey, I will let you go eat some more pizza. Now I am going to be joined by Peter Momat. Splash in the Futures is coming up next. Like I say, inside day, but probably some trade ideas out there. We'll see what we can get cooking. We'll talk about ags and a few other things. Mikey, thanks so much. And thanks everybody for watching. See you soon.